Thanks, Charles. And okay, got it. All right. So yes, thanks, Charles, and good morning, everyone. Thanks for taking a few minutes this morning to learn about our Certified Retirement Counselor or CRC program. And hopefully you'll see how the CRC can be a valuable component to your professional development and see how it can increase your knowledge and skills while at the same time uh, tangibly can convey to your clients that the commitment that you've made to your profession and helping them make informed decisions. INFRE, which is the International Foundation for Retirement Education, or INFRE is easier, so that's why we say INFRE, started in 1997, and today the CRC is recognized as one of the top retirement designations that an advisor can hold. Uh, why a CRC? Well, first of all, the CRC was created more than 20 years ago with the help of our academic partner, Texas Tech University. And by this time, boy, more than 100 highly respected retirement industry practitioners. And it was created to enhance the retirement planning professionals and financial services industry professionals' expertise and retirement planning, and it's helps those that are new to the industry as well as those that are the most experienced. It's our only certification program, and it allows us to focus full attention on ensuring that the content to help prepare for the exam and is relevant and up to date. Um, it is an accredited program. That's important. So it's independently accredited by the National Commission for Certifying Agencies. It's actually something we have to renew every 5 years. And I just found out just a week ago, after months of putting together the documentation and information that they need to review our program, we found out that we were accredited for another 5 years. If you go to the FIDRA website, you'll see that they list close to 250 designations, lots of alphabet soup out there at this point. And they don't recommend or endorse any particular designations, but they do point out the importance of looking for a designation that is independently accredited, which means just means that the whole program has been scrutinized independently by a group to make sure that we're meeting various standards related to how we put the program together, the governance, how we create the exams. It's a very involved process, not inexpensive. And that's why last time I looked, there were only 8 out of all those 250 designations that were actually accredited. So something we're very, very proud of, and it just lends itself to the whole credibility of the process and of the program. The content itself, you'll see if you decide to move forward and start the CRC program. The content's unique in that in addition to the traditional types of, retirement accumulation and distribution planning concepts, the study guides, which I'll go through a little bit in just a little bit, also cover topics like behavioral finance, working with clients based on different communication styles, generational considerations, financial elder abuse, just lots of other client relationship building topics, if you will. And we try to play emphasis on going beyond a transaction focus by helping advisors apply a consultative approach to help your clients make informed retirement planning decisions. The distribution planning content also promotes the use of insured retirement products. I'm not sure if is everybody insurance licensed? Do you sell like annuities and everything? Yeah. Okay. Yeah. So, the use of annuities primarily is one of the concepts that's used to help clients think about creating a lifetime income plan in combination with their other managed assets. Other retirement designations tend to just cover, topics that are a little bit more narrower in scope. So we pride ourselves on the fact that the holistic approach that we use in our program. If at some point in time you would be interested in becoming a CFP, and I'm a CFP as well as a CRC, And I would never discourage anybody with a comprehensive practice, looking from all different angles from obtaining the CFP designation. Frankly, a lot of our advisors who are retirement planning focused find that the CRC aligns well with their professional development and designation objectives. But ultimately, if the CFP is something you're looking for as a CRC, going through the Bryant University registered CFP program. So you have to go through a registered program to go through an educational program before the CFP board will allow you to take the CFP exam. So through the Bryant University program, you'll receive a waiver of 2 of the 7 courses they require, and you'll save up to $1,100 on the tuition fees from Bryant. So, and that by itself will pay for your CRC fees, by the way, more than pay for your CRC fees. So you can conceivably, I think, now earn both the CRC and the CFP in the same amount of time that would take to earn the CFP by itself, by virtue of the fact you get these waivers on some of the courses that Bryant requires. And Bryant also is a very highly touted program. They've been very successful in helping their students prepare for the CFP exam. Their pass rate for their students is about 10 to 15% higher than the national average. Also, and importantly, when it comes to the fees, which I'll get to toward the end of my presentation, I think you'll see when compared to other retirement designations, the CRC offers the highest quality content for the lowest cost. Again, we're a nonprofit, so we try to make it as easy as possible for advisors financially to get into the program. While other retirement designation program fees typically range from, last time I looked, somewhere between $1,400 and $2,500. The CRC certification fees before any discount are about $1,100. But again, in a few minutes, I'll let you know, based on our partnership with Emeritus, how you can save even more through a discount program. So you put it all together, the CRC certificate is an indication of competency, credibility, high ethical standards. This a few years back now, but the Wall Street Journal said in an article that the CRC is one of the top 3 retirement designations consumers should be looking for in their advisor today. I think the best way I can convey the value of the program is to share some comments from a recent survey. I'll just read them. The breadth and depth of knowledge I gained through the CRC program has helped me become a better advisor to my clients facing retirement plan issues. The CRC is acknowledged as a legitimate recognition of pertinent knowledge and a discipline of ongoing study. We all know that a certification is not a guarantee of competence. I agree, but it is a helpful way of saying that I've at least mastered a body of knowledge. I've had certain clients that are more willing to discuss their retirement plans once they know I'm a CRC advisor. And lastly, the CRC certification has enhanced my ability to attract prospects and has enabled me to articulate my specialization in retirement income planning. One of our certificates told me that he really liked that the designation was certified retirement counselor, because that's what he really does, counsels his clients and helping them make some of the most important financial decisions they'll ever make. So let's talk a little bit about the process to become a CRC. The primary requirement is to pass a 200-question multiple choice exam, which is administered at Prometric testing centers, which you may be familiar with, computer-based testing centers, and those exams are administered during 2-week windows in January, April, July, and October. So it'd be pretty aggressive to get ready for the July exam at this point, but certainly the October exam or January exam would be a good goal if you were to start the program sometime during the summer. There is a 2 years of experience required to be able to take the exam and use the marks. Put CRC after your name. 2 years of experience required with a bachelor's degree, or 5 years experience required with a high school diploma or equivalent. And the experience is defined very broadly. It's just something related to, in your career related to financial services in some form or fashion. As an accredited program, there needs to be a recertification requirement. In the case of the CRC, we ask certificants to submit 15 hours of CE annually. but it's not like you're going to have to go out and earn more CE. I know that already is something that you need to do, especially for your insurance license. Anything that you do that way will be applied to your CRC CE requirement. And if you had, say, you had between your state insurance license and other things that you might need to do from a continuing education perspective, if you had 20 hours in 1 year, you can carry over up to 15 hours into the next year. So if you had 20 hours, you'd have 15 hours for the current year, and another 5 years you could, or 5 hours you could carry over for the next year. So it's usually not an issue for our certificates to meet that CE requirement, and more than 90% of our certificates renew their certification each year, which I think is a testament to how much they value their designation. Typically, when they don't renew, it's primarily because they're either career changers or they've retired from work. So here are the 5 study guides that you'll receive, which is the primary resource that you'll use to prepare for the exam. Fundamentals of Retirement Planning, Fundamentals of Investments. Fundamentals of Retirement Plan Design gets into different types of qualified, non-qualified retirement plans, IRAs. Social Security is covered in CRC 3. Again, I think, as I mentioned earlier, the CRC is different from other retirement designations in that it covers both accumulation and distribution planning concepts. And I think you'll particularly enjoy CRC 4, Fundamentals of Retirement Income Planning. You'll see a process for creating a retirement income plan that revolves around managing the 4 retirement, what we consider to be the 4 primary retirement risks: longevity, inflation, healthcare, and investments. And how to then create a retirement income plan by combining a systematic withdrawal plan with again, potentially annuities, to not only create a guaranteed source of income for essential spending, but also to extend the life of the rest of the remaining managed assets. CRC certificates, and then CRC 5 is Principles of Retirement Counseling and Education. That book isn't quite as much content as the others. And gets into the more of some of the working with clients based on different communication styles. Our code of ethics is in there, and some other educational kinds of concepts. CRC certificates who are familiar with one or more other retirement designations programs say that the CRC is more comprehensive, they believe, and relevant to their business. They also like that the content incorporates applied knowledge versus just memorizing information to pass the exam. And they consistently comment on how the process orientation of the CRC content prepares them to offer more holistic retirement planning counseling services and solutions that are in their clients' best interest, and helps them help their clients understand the benefits of implementing a plan using the products and services they provide. And when asked in a survey how valuable the CRC program was for helping them implement, or I'm sorry, how valuable the CRC program was for helping improve your ability to counsel clients on their retirement planning needs, 91% of CRCs indicated it was valuable to extremely valuable. One certificant told me that after she was pretty successful, she was actually inducted into her company Hall of Fame. Her career was 25. She'd been practicing for 25 years. It was for an insurance company. She said that she then went through the CRC program, and it really changed her life in terms of how she works with her clients to help them plan for retirement. In addition to this 5 study guides, you'll also have access to pre-recorded e-learning modules, which are designed to be supplemental to the study guides, not necessarily standalone, but just reinforce a lot of the concepts and information within the study guides. Quiz questions at the end of each chapter in the study guides, plus an additional more than 300 practice exam questions that you'll have access to. 3- and 6-month study plans and other resources as well. One of the questions I always get, and so I just put a bullet point on it, is, Kevin, how long is it going to take me to prepare for the CRC exam? And it's going to vary depending upon your background and experience, certainly. But based on surveys, on average, I would plan on somewhere between 15 to 25 hours of study for each of the first 4 study guides, another 5 to 8 hours for CRC 5, again, because that content is not quite as much, not as, that study guide isn't as thick. But again, actual study time is certainly going to vary depending upon your background and experience. Most candidates who start the program 3 months in advance of scheduling their exam have plenty of time to get through the material and get benefit from going through the material without it intruding too much on their work or family personal time. And just remember that the time you invest in preparing for the exam will be well worth it, not only in terms of passing the exam, but hopefully will help you become better at what you do in terms of engaging with your clients on retirement planning issues. So the fees, as I mentioned earlier, the CRC program offers, I think, the most comprehensive retirement planning content, while at the same time having the lowest fees. But it gets better because with our partnership with Emeritus, which we've been working with for many years now to help advisors become CRC certified, Charles has gone through the program as well as many others. The study guides are typically normally $540, but we're offering until June 14th, which is a week from this coming Friday, a 50% discount on, I'm sorry, a 35% discount, which was 50%, 35% discount on study guides, which would make it $350 instead of the $540. And that fee includes access to the pre-recorded e-learning modules and the practice exam questions and all the other resources. The exam fee is $575, so the total would be $925 for the upfront fees to start in the program and take the exam. In addition to the submitting the CE and to help us maintain the program and maintain all those accreditation requirements, there's a renewal fee of $150. So I'm almost done, but I want to tell you one quick story that I think represents more than anything else why I think the CRC program can have a positive impact on how you work with your clients. It wasn't not so long ago. Now this was a candidate for the CRC program. He had not even taken the exam yet, and he called me. He was kind of excited. He started to tell me he was an experienced advisor. He was transaction oriented all his career, and he was meeting with a new prospect. This particular advisor was in the Atlanta area, and he was meeting with a firefighter who was getting ready to retire. And he said, I'm going to apply in this meeting. He applied in the meeting some of the more holistic consultative kinds of concepts that he was learning as he was going through the CRC study materials. And he was genuinely surprised. He said it was the best first meeting he had ever had. And he then went on to become a CRC and has been applying his new approach successfully ever since. So with that, let me just stop for a second before some closing comments to see if there are any questions, or Charles, if there's anything you'd like to add.
Well, no, I think I see Derek on the call as well. And we actually started a study group, which is because it's the self-study, the study group really helped us. There was times where, because I think the first time we went through it, I really didn't take those books seriously. You can't take this stuff lightly. Those were five books. I'm saying that, well, the investments, I thought I knew it all. Social Security, I thought I knew it all. But when I got to that first exam, I realized, whoa, there's a lot of stuff that I didn't know. Right. But it's helped me so far. When you're CRC, you have your certificate. When you're dealing with clients and they have 401k or, just makes you a lot more confident to be able to read these statements and really help them to navigate their retirement. So far, this has been really, really good. I just had a question on the CE. You said it's 15 CE credits per year, because in New York, the insurance requires the 15 hours every 2 years. So you said you would accept the 15 hours for the New York state license, and in addition, the CRC has its own 15 hours. Did I understand that correct?
Right, but you would be able to use those, at least every other year, you'd be able to use those 15 hours to apply toward your CRC CE. Now, every year or every 2 years, you have to take a 2-hour ethics class. So I'm not sure if ethics is part of what you need to take in, for your state insurance license requirements. But if there's a course in there, that you can take that is an ethics class that would be good for 2 hours, then you would want to use that so that you could also meet your CRC requirement for the ethics. And then on the year in which the off year in which you don't have the insurance license need, but CE needs, but have to meet the CRC, there's anything else that you might do for CE. We have a newsletter that allows you to on a quarterly basis earn an hour for each of those. So 4 hours of free CE that you can obtain just by going through that newsletter, and any other resources. We have other resources for CE as well that we can help you with.
All right, great. Derek, you have anything you can add? I know you're on the call. If he's on mute.
Anybody have any questions?
Guess not.
If they want to.
Well, I don't have a question, but I actually went for the CRC too. Like Charles said, you got to definitely take it serious. I'm going to have to retake the exam, which is all right, right? It took Kennedy 7 times to pass the bar, right? So um but it definitely to real life attest to what the other advisor mentioned about the holistic approach. So we tend to take a holistic approach here. However, adding a lot of this stuff from the CRC just in not just in practice, but actually in application, it actually does, turn out, and it does help you to gain that confidence when working with your clients. So kudos to N for you guys. Have something special there. I am happy to get to that shortly. Now, I do have a question. You mentioned something about it kind of being a shortcut to the CFP, or I guess an appendant body to the CFP.
Right.
Use my esoteric language.
No worries. Yeah. So Bryant University is a registered CFP. So again, when you want to become a CFP, you first have to sign up with a registered CFP program, which there are many of them out there. But one of the top programs is the Bryant University, or at least highly touted programs is the Bryant University program. They do a really good job of walking through the CFP candidates through the content to prepare for the exam. And they tend to, from what I can see, tend to be also one of the more cost-effective programs out there. And as a CRC, once you become a CRC, you will receive a waiver of 2 of the 7 courses. So it's a course on estate planning and retirement planning. You'll receive a waiver on those 2, so you have to take 5 courses, and you'll save on they do virtual instructor-led courses. You'll save $1,100 on that, so you can see that again that more than pays for your CRC fees, and that usually takes people a couple of years, sometimes, or a year and a half to 2 years to get through the CFP registered programs before they can sit for the exam. So this is going to shorten that time frame quite a bit by almost a third by virtue of getting the waiver of those 2 classes.
Cool. With that, I guess and another question would be, seeing as it has an effect with the CFP, is there any kind of a waiver or anything for the CLU?
No, it's our only relationship that way is through the the CLU, and a lot of those other designations are different from the CFP in that they don't require necessarily separate from the CFP board, a course of study. So it'd be hard, so everybody has their own different way of helping them prepare for the exam, which the CFP board prescribes what content needs to be offered through these registered programs, and that's why they can offer a waiver. But we don't have that kind of a relationship with any other programs just because of the way they're structured.
Hey,
Thank you.
awesome. Hey, awesome. Thank you. Thank you for that, Kevin. So if anyone interested, I guess they could reach out to Amy, right? Information is there on the screen, right? And what you guys, the advantage you guys have that I didn't have going into it, you have myself and also Derek, who can help you and help you to prepare and what to expect and really get it going. And in addition to what Kevin is showing on the screen, Emeritus does, depending on what contract you have, they do have a tuition reimbursement. So of course you would pay that up front, and based on your production, they would there's a reimbursement feature on that as well. That's also something that motivated me. And it was a lot more than that, Kevin. That's actually a great that's actually a great
Yeah, that's a
deal.
healthy difference.
Yeah,
Yeah,
that's great.
yeah,
That's
for
awesome. And you
Kevin.
sent out that PDF that I forwarded?
yes.
Derek?
I'll resend it out again to the people on the call.
Okay, so what Charles is
Derek
sending you is basically a one-page write-up on the CRC, but importantly, there's a link there to a customized Emeritus website page that has pretty much all the information that I just shared with you today, and also a link toward the bottom of that website where if you're interested, you'd start by, you pay for both the study to get the 35% discount. You pay for both the study guide and the exam fee at the same time, and then you'll work with Amy. Will be sending you, emails, and she can again answer any additional questions you might have. Her contact information is in that document that Charles has sent as well, and she can answer any questions you might have. And then, you'll get emails and information about every couple of months prior to any of the exam windows. You'll get an email that says, "Are you ready? If you're ready, go. You want to go as quickly as possible to schedule your exam because, these prometric testing centers, sometimes some of them are kind of, they don't have as many seats. And so to find a date and a time that's most convenient for you, you'd want to schedule it as soon as possible."
Yeah.
Also feel free to share that document with, others that you may know that are not necessarily, haven't participated on this call. If you know of any others,
Okay.
feel free to forward that to them as well. And Charles has also my contact information if you have any questions for me.
And I think Derek was trying to comment. Came off mute.
Go ahead.
Derek, you came off mute.
Yeah. Am I on?
Yeah, you're on now. Yeah.
Good afternoon, everyone. Kevin, the CRC was very, very, very interesting. I mean, I've been around insurance products for a while. I thought, like Charles, that I knew a lot, and then I took it kind of lightly, and then we realized that you really have to understand, not only understand, but apply. So I think it was well structured at the CRC. My question to you is, on the average, how long does it take to come to study for the CFP with the credit that you'll get from the CRC on the average?
Yeah, and I don't have the statistics on that at this point. That's a relatively new relationship that we've had with Bryant. But they usually try to structure it normally to go through, everything usually takes a year to a year and a half. They try to condense that into a little less than a year with one of the programs they have, I know. So conceivably, you could, maybe get through that program in 6 to 10 months versus, 10 months to a year and a half, something like that.
Great.
And it, depends upon how much time you can obviously put into it. But even though some of the, not all of the, you only get a waiver of 2 of those 7 courses, there'll still be additional overlap like investments, like, was mentioned, CRC2 on investments, there's a lot of that in the CFP obviously as well. So even though there might not be a waiver for that particular topic, there'll still be a lot of overlap that'll, I think, help you streamline your preparation for the CFP exam.
Thank you. Thank you so much.
Yeah.
All right, great. Thank you so much for that,
Well,
Kevin.
thank you for your time. I look forward to working with you. All to start the CRC program for those of you that are interested. And again, feel free to call Amy with any other questions you might have. Thanks for your time.
Awesome. Thank you. And Flora, are you there? I see Flora. I see. Is that Flora with the 513 number?
All right, I'll hop off, Charles.
Okay. Thank you.
Thank you.
Flora. Hold on a second. Let me call her.
I think that's her, but I don't know if she's able to unmute.
Your phone busy. Flora, if that's you, you can unmute yourself. Let me pause the record.
And then hopefully I will
Sorry.
be brought into the mix in that in August, September.
Are you also doing annuities?
No, this is just for new life, not annuities or DI.
Okay, thanks.
All right, so Flora, if you just don't mind, you can just walk us through the process and anything that you can, because the name of the game is to get cases issued. We're out here and we're working and we're getting cases put in the system, but then just kind of let them know what you do and what they can expect and how we can help you streamline the process.
Well, certainly. Well, first, thank you for inviting me to the call. I really appreciate it. And it's nice to hear the voices of those that I've heard so far. But let's talk about issue. And let's start with the underwriter approval. So when the email comes out from underwriting, and of course, provide you the terms of the approval, there could or could not be the good health statement requirement or the GHS, which is what it's commonly referred to. And for those of you who are well versed in the GHS, I apologize if I'm being redundant, but for those of you who aren't, I just wanted to provide some more clarification on the GHS. So the GHS, you're going to find that if it's an aged application, simply because, medical occurrences could have happened since the application date. Or if there's a table rating, you're always going to have the GHS. And it's just really important because with the good health statement, that's basically a restriction when we issue the policy. We will not put the policy in force. We will not draft at issue. And commissions, of course, will not be paid until it is drafted and paid. So it's always really important, to check the underwriter email when you think those might occur. And I've been trying to, when I send out the issue instructions, if there's a GHS requirement on there, put that in there as a reminder, because I know it's easy when we get so many emails every day and, they're kind of generic looking to not always remember that. So once the underwriter approval email goes out, we have the terms that we're approved to issue at. The issue requirements email will come out, and those will always consist of course, the issue instructions. You have to provide us with approval to say, yes, please draft, please issue and draft. And we'll always ask for that. So if you see me come back after you may have provided, I'm so sorry, my allergies are acting up. Some of your issue documentation, you might still see me come back and say, oh, hey, do we have approval to draft? So issue instructions, the EFT, which we'll talk a little bit more in depth in that in just a minute, the illustration if it applies, and any other miscellaneous requirements there might be for New York. There might be a replacement form that we can obtain at issue, or if there's any other outstanding items that are required before we can issue, those will be on there. The only other item that we really look at for issue is the delivery selection. How did the client select the delivery option? And what's really nice with the new e-app is that that's built right into the application. So it's no longer that separate form, unless, of course, it's New York, because New York is still on the old application form at this time. So those are the items that we're going to be looking at and looking or requesting from you if they're needed. On the EFT form, there's always angst over the EFT form. And I'll just give you a little bit of information. First of all, if we have an EFT form on file, say for the client or a spouse, but it's not dated within 6 months, we can't use it. They're only good for 6 months and they do expire, and we would have to have a new EFT form. And then with the EFT forms, the new ones, you'll see that, especially for the FPUR, they break it out, which is really nice. Scheduled, received, is it, how you want to pay it, monthly, annually, quarterly, semi-annually, and the same for just your regular base premium. So you really need to fill those out. This is one thing that I noticed, and I don't know if the draft date at the top, just will populate with the date you're completing the EFT. But when we're reviewing the EFT and it has a specific draft date on there, we're always going to question that and say, especially when we're at a commission cutoff, but maybe the draft date doesn't align with the commission cutoff, we're going to be looking at that and saying, oh, hey, what do you want us to do with this? Is, draft current or draft so that future drafts coming out will meet that draft date. So we'll always ask about that. That's something to keep an eye on. And then more importantly, the bank account information. So we do need the bank name on there, and we do need to know what account type it is. Is it checking? Is it savings? And then credit union or bank is helpful, but that's not as important as the account type, checking or savings, the bank name, and then of course, trying to make sure we have correct routing and transit bank numbers and correct account numbers. And as you may or may not have experienced, if we do have incorrect routing or transit or bank account numbers, the premium can be returned, and then we have to reach out to get that information re-verified and redraft it. And I can tell you now, from what I'm hearing, they're going to start being a little more strict on that. So I know before, I think we were giving 5 business days to get the information back in. I know it's went down to 3 days, and they will, if we don't have the redraft completed within that time frame, they will reverse the policy and reverse the commissions. And so we never want that to happen. So if you do get a notice from me, if that would happen, accidents happen, typos happen, and I'll tell you, 9 times out of 10, when I do get a return, it is a typo. Oh, we left a digit off. Oh, we put an 8 on there instead of a 6, or, there's a lot of numbers going on in there. So just, try to keep an eye on that and make sure those as accurate as possible. The only other thing I've really noticed on the EFT is when the payer is different than the client, when you're printing that EFT out of the system, a lot of times it drops in the client's name, even though they're not the payer. So just keep an eye on that. Whoever is the bank account holder, their name should be in there, and as the payer, the bank account holder, and signed by that individual. So those are the things to keep an eye out on the EFT. And other than that, the illustrations, I know you guys are familiar with illustrations. this is another thing I've tried to be proactive about doing, but sometimes I don't always catch it, but I try to look at save age when I'm issuing or sending out the issue instructions. Hey, is there a save age in place? Because otherwise I would have to come back to you again and say, oh yeah, we received your illustration, thank you. However, save age is in play. Is everybody familiar with save age? Or does anybody want more explanation on what save age?
Yeah, I was gonna say, can you go ahead and explain it for us?
Certainly. So what happens is the client's age will update to the next year of age. So let's say from 55 to 56, when the birth date is within 6 months. So when we are looking at issuing, and let's say that birth date is now falling within 6 months period, where the system is pushing it to that next year, whereas your illustration, or when you guys are reviewing it on your side, you're keeping it at the current age. So what we can do is when it's within that 6 month period, we can do what's called save age. So we can apply save age, but then what happens is that dictates what the policy issue date will have to be. So for example, I just had one where the save age was April 24th. So we could keep the client at the current age instead of the next year's age with the next birthday coming up. But then what that means is when we issue the policy for that April 24th policy date, we're going to be collecting that initial premium for April 24th, and then the next initial premium for May 24th. And then the premiums moving forward from there will be on the 24th of each month. So instead of paying 1 month's premium at issue, they paid 2 months premium at issue. And believe it or not, we've had some people who will go back and pay 3 or 4 months, to get the save age and pay the 3 or 4 months premium at issue so that they can, save that age and not bump it to the next year. And I would say, go ahead.
How far back can you go?
I'm thinking we can only go back as far as 6 months.
Okay.
It's that 6 month period. So, you can't go, really there's no point because it is within that 6 month window.
Yeah, no, that makes sense.
Does that make sense? So that's something on the illustration. If you want same payer discount, that needs to appear on the illustration. And let me throw one other thing in there about save age. On your whole life policies, save age won't apply on there. You'll just have the correct client's age that you want the policy issued at. So if we're saving age to keep their age at, let's say, 55, instead of bumping it to 56, you'll just submit the illustration with age 55.
Okay.
Okay.
Flora, I have a question. And I actually know
Certainly.
well, can you explain just back to the EFT situation? So you have like a digits off, and the initial premium doesn't clear. The first part of that question is how long, when we say, okay, if we say today's June 4th, it's okay to issue and pay the policy today. Like how long before they actually draft the initial premium, right? And then secondly, when that premium is returned from the bank, whatever account closed insufficient, the various reasons, like that initial premium we have to call you and do it, correct? Because I know Alonzo we had situations where they call customer service, and but just to explain that process
Certainly. Yes. So when we issue the policy, if we're drafting, we draft when we issue. So if I'm issuing and drafting a policy today, I'm going to go ahead and draft it. Now let me provide a little more clarity on that. I'm submitting the draft. So I'm either pulling it automatically through the system, depending on how it's set up, what type of program and product, if the FPR or FPUR is involved. And, sometimes you might have an annual pay mode for the FPR and monthly for the base. So sometimes we'll pull it right automatically through the system. Sometimes we'll go out to cash management where we actually kind of think of it. I don't want to use the word ACH because it's really not an ACH. but it's a little bit different transaction. So when we have to go out and submit that in cash management, it goes through approval. So I may submit it this afternoon. It may not get approved till tomorrow and actually go through. And then you're going to see it hit the client's account probably in 24 hours. So I would say from the day we draft an issue, especially if we're doing it in the afternoon, think of banking, hours, I would say you're looking at 24 to 48, maybe as much as 72 hours before it's actually going to hit the client's account. And that will also depend on their bank. If it's a bigger bank, they're probably quicker versus maybe a smaller bank, local bank, or credit union. But definitely 24 to 72 business hours is when you can expect that draft to hit. Now, when we get notice of the return, I can tell you now that it probably takes about 10 business days minimum for us to get a notice of a return. And this is for the initial premium. So think of new business life as new business. So we're setting up the new business and we draft for the initial premium and we issue those initial policies. But once it's set up in the system for servicing, then your requests are going to be going through servicing. They're no longer considered new business. And I'm trying to make that as easy to understand as you can. And I will tell you, I did have someone just reach out, not from your agency, I don't think, I'm trying to remember, but the policy had been in place for a few months, but they did have a return and they're like, oh no, I want to keep my policy in force. What do I need to do? So they did reach out and, I connected them with customer service who, can help them to make sure that that redraft occurs for them. So think of us as new business, but once the policy is actually set up and servicing, now you're going to be going to client services. I hope that makes a little more sense.
How do we know the difference? Well, yeah, that's what I was going to ask you. How do we know? Yeah.
Right. You know what, Charles, that's a good question. And I would say, I'm wondering if it's considered new business because, we reissue policies, within a couple of weeks. Oh my gosh, guys, I'm sorry, my allergies are killing me, of policy issue. So I'm thinking that by the time the second draft occurs, that it's probably set up in servicing by that time. But let me get the correct and definite answer for you. And I would like to know that as well myself. What is the time frame from when the policy is issued to when it actually is in the servicing system? And then, inquiries would go to customer service or client services. So let me find out that for you.
But still, that initial premium, if it bounces, has to be done through you or
correct.
Because
Yes.
customer service would take the premium, but they don't apply it. So I don't know. It just seems to be a miscommunication between new business and home office. Because clients would go right online and pay and say, hey, we paid it, but the policy's still not enforced because it's the initial premium.
Yeah, and they get a confirmation number.
Wow, I've not heard of that before, Charles.
Oh,
I
yeah.
didn't know that was happening. So the client is like, oh no, I know my premium's being returned, and they call
Actually,
in.
Alonzo, you want to tell that story real quick?
Yeah, please.
In
So I had
5 seconds, Alonzo.
So one situation, like you said, a person will go online, but another situation, so generally what happens is we'll tell the customer, hey, call 1-800, customer service, or we'll do like I do. I call customer service on the line with my client. And we actually made the payment on the phone with the client. And they gave the client a confirmation number, took his card number, everything, boom, boom. And then the policy was canceled. It happened twice, once with one of my regular customers and once with my niece. And I had to, I guess, call new business. And basically, you weren't our head of new business at the time, but I had to call new business and basically call you for the initial premium. And then whatever customer service took got, I guess, refunded or applied to the
Right.
policy afterwards.
Okay. Yeah, so I'm assuming then you're saying it was the initial premium that was returned, correct? The policy had not been enforced for any period of time.
Yes,
Yeah, it
the
was
initial,
like
the initial premium, the initial,
premium bounce. Yeah.
the initial
Okay.
premium bounce, but then the subsequent
Mhm.
premium renews.
Right.
So then I think it goes into servicing, but if the initial premium's not clear, that's when you get the chargeback. So I don't know. It's safe to say,
Right.
well, that has to be done through you. That's what I'm trying to get a confirmation.
Right. So this is what I would
Initial
say to
premium.
you.
Mhm.
Definitely, because accounting sends us notifications, and we have to actually go into the system to clear the return and input the redraft to keep the policy current. So I'm glad you shared this with me. I'm gonna run this by management to find out, one, like you say, why is the call not being directed to us? Or maybe they are supposed to do that and there's more they're supposed to do. I'm just surprised to hear that, but that doesn't, I mean, it just could be, I don't have all the details on that, but I do know that we handle initial premium returns. So
that's safe to
if you
just
ever,
stay like that. Okay.
So yeah, it's
Mhm.
safe to say we just contact you
Just
then.
contact you for the initial.
And then I actually have 2 questions on specific policies. I can give you the numbers if you need.
sure.
One is I00548881A.
Here, let me pull up.
Well, these are, we can stay on, but everyone else, does anyone else have a general question? Because Alonzo's question is specific. Anyone else have any general questions? I guess not. I mean, so everyone,
Well, if
y'all are
yeah,
free to leave if because Alonzo is a specific question.
well, always feel free to reach out if I can help with any questions that you guys might have or come across. Always happy to help, and that's what I'm here for. So thank you again for inviting me, everybody, and hopefully I can join again another time and maybe provide other information for you.
Thank
Yeah.
you.
So Alonzo, you can call.
Thank
can call
you.
anyway. All right. Thanks, everyone. I appreciate it, and y'all have a good day.
All right.